Hello, everyone, and welcome back to the Hub channel. Brandon is out today, but joining us as he does every week, Rob Roy, talking about US markets. Rob, it's early for me. It's only 6 a.m. here, so I'm still catching up, but I understand Jerome's had some comments, and I see you guys have been really busy over there at EWO with a number of trade alerts. How's it going?
We have been. It's been a very busy day, and good to see you, JP, and getting up early in the morning. Wow, from down under. Happy to have the big guy from Hub here. It's awesome. So, it's been a busy day. Lots of trades going on. Market, very important inflection point, which we'll get to in a second. But, glad to be here. Up in the mountains where it's cold and rainy today.
Yeah, I was going to say that. We're heading into summer, and you're heading into winter. But how you seen the market? How you seen the market? I can see from just taking a quick look at things. As I said, Jerome's had some commentary, but I can see that financials are up, and also looks like small caps are giving us some performance today.
They are, actually, and we start with the S&P because it's right at a really important level. The IWM, the small caps, as you mentioned, have already broken an important level, and so here we are. We did hit 460 on the high, and the market has bounced off a little bit, but still a pretty solid up day in the markets. But man, this is make or break time right here. I've talked about this for the past couple of weeks, how we've had this bit of a vertical move. That always makes me nervous. And then the gaps that exist in the market right here, and here. You can see we are not, though, overbought anymore from the 10-day moving average. The sideways consolidation over the last week has allowed that to rectify itself. We have a tiny expanding triangle right here. And if that's enough to break us out, we could move above 460. If we get above 460 with follow-through, regardless of what you think in the market, you got to be long at that point in time. But this is where the rubber hits the road, as they say, because we are right up against those July highs. Not all-time highs, but those July highs. So I don't know. If we break above here, I think it's going to confound a lot of people. Just one real quick comment. Yesterday, it looked like we were breaking down yesterday. The market was lower. And then Janet Yellen, the Treasury Secretary, comes out at 3:30 Eastern time and makes about as dovish a comments as you can. Thinking that the Fed's done their job, should be no more rate hikes. And employment's coming down as the Fed wanted. Inflation's coming down, kind of where they want things to be. But yet the market is pricing in 100 basis points of rate cuts next year. So at some point, we should see a further weakening in the economy. But that's pretty aggressive on the rate cuts. And if that does come in, that's a lot of liquidity that could propel things higher. But we got to break this 460 level first. Didn't know if you wanted to make any comments on your end on the S&P, or if you want me to go ahead and show the IWM. But yeah, that you're spot on as far as that being a big day today.
Yeah, as I said, Rob, I'm still catching up, so feel free, go ahead. You have the floor.
All right, I'll go ahead and bring up the IWM, and we had talked in our insiders meeting last night for our alert subscribers at ewotrader.com that this 180 level was going to be key, and we did discuss, which is panning out to be absolutely spot on, that if we did break above 180, because we had this ascending triangle pattern there, I've already got the resistance at 180. There was the higher lows for the ascending triangle, that if we broke above this 180 level, we would probably move up towards 190 in a relatively short period of time. We're halfway there today. Big breakout move on the small caps. And, can the small caps breaking to the upside indicate poor market conditions, poor economy? Yeah, a lot of people look at the small caps for risk on, risk off, almost as much as looking at the bond market. And by the way, rates are back down again today. So you got rates moving down, you got small caps moving up. It sure sounds like a risk on type thing. But for the final straw, we've got to see break above 460 with follow through on the S&P, I think. But the Dow has broken the new highs. The IWM breaking out. it's hard not to be bullish at this moment right here.
Yeah, agreed. And that movement on the IWM, it looks like there's a bit of volume there in terms of relative volume. We got that move up a couple of weeks ago in the IWM on a nice substantial volume spike, but volume, it's been reasonably quiet, but it's starting to move up again a little bit above average. So really interesting. I agree. I'm wondering, how do you see volume on the overall market?
Well, volumes are solid today, and as you point out, as I've got on the screen here, we're only at 2 p.m. Eastern time, so we got 2 more hours before the market closes, and we're already above average, at least the 200-day moving average, which is what I look at for average volume. We're already above it, so with 2 hours to go, even if we calm down and back off a little bit, it's still going to be a very solid volume day on a breakout of a triangle. As you know, JP, Elliott was always a big fan of triangles, and even the smaller ones. He said, don't diss those, don't discard those. They're just as important as the big triangles. And there you go. There's the breakout. And what's to stop it from going up to those levels that it reached back in June and August, back up at 190. Now we got to stop as far as saying to the July highs, because maybe we bump our head a little bit at 190, especially with a move like this today, but it's on solid volume. And so if we go back and look at the S&P and see if we're getting the kind of volume there, not quite the same volume that we have on the small caps, but again, we have 2 hours to trade yet. And at that point in time, you could see at least solid volume. And look what happened yesterday. Good average volume on the first attempt there to break out of that expanding triangle. So yeah, your point is well taken. Volume solid. This is not some sort of a low volume just drift, as a lot of people talk about this time of year. There's real buying behind this, not just short covering.
Yes, indeed. Now, should we move on and take a few questions? We've got a couple of people looking at some symbols already in the comments. Is that how you and Brandon usually run things?
Yeah, at this point, not much else to say as far as the markets. And we love to get questions from the viewers and see what they're looking at. I got a feeling I know what a few are going to be, but let's go ahead. Yeah.
No, I was going to say, if I was Brandon, I'd have more hair and I'd be talking about crypto, but I'm not. So let's move on. So the first stock that Will is asking to take a look at is PDD.
EDD?
PDD, sorry.
Accent from halfway around the world, but that's a good one to look at. We haven't looked at that one in a bit, and you can see the move there is pretty vertical. So it looks strong. If we bring on the DMI, take the volume off here, but the DMI looks like it's only at 30. And I think that we have a ways to go here. The Elliott Wave algorithm likes the 170 price for whatever reason. We're only at 180 or 145. 145. We're a tiny bit overbought, but this looks like a breakaway gap. There's all kinds of different types of gaps, but that one looks like a breakaway, and I think we can see 170. So, Will, I think you're on to one there. Even if you get a little bit of a pullback, I think you got more to go to the upside there.
Right. And Will is also asking if you wouldn't mind to take a look at Path, please. UiPath, right? On the NASDAQ there.
Well, we got it on the NYSE. That trades everywhere.
Oh, yeah.
Sorry, I was just taking a look there at all the different markets that this trades on, and same thing here, not quite as vertical. So if I had to pick between the two, I'd actually choose this one because it doesn't have as much of a vertical move. Let's see if we can get today's quote in there, but it does. Oh, wow. Well, that changes things, Will. Holy cow. Yeah, now that it changes my view. The DMI is still supportive, but that's a huge move. Was that on earnings? Was there news out today? I'm not really familiar with what caused this kind of a movement in the stock today, but yeah, it's earnings. Okay, so is earnings obviously positive? This is where I have a problem, though. I just my disciplines don't let me chase that kind of a move. I do think it goes higher. We probably see the 28 level there, and I just don't know. And the volatility would be insane in call options today. So if you were to go try to buy calls, even a little bit of calming down, your calls are going to lose some value. So I think I would give this one a day or two to calm down, maybe back off a little bit. But I do think 28 is, and so that's a pretty substantial move still. So we're just under 25 at the moment. So, yeah, I just wouldn't chase it today. You're going to pay too much in IV for those calls, but that's a significant earnings breakout right there.
Thanks, Rob. And the next one I've got for you is from Alexandra, who is asking if you could take a look at KRE. It's a regional banking ETF. And, we talked about finance at the beginning of the show.
Yeah, I was going to say, you mentioned at the beginning, and there you go. There's what you were talking about. There's the break to the upside there. Also very supportive from the DMI. And, if the way the rates work with banks is banks don't necessarily care whether rates go up or down. I think they would prefer them to be a little bit lower, but it's the spread, right? That's where the banking sector makes their money, is the spread between the short and long end. And the fact that rates have calmed down has been beneficial. You've seen this kind of a drift to the upside here, and then a big move today. So money moving into the financials today. Again, yeah, like we talked about with the IWM, JP, these are things a lot of people, it's very old school, but a lot of people still believe that you have to have the financials leading the market to have a sustainable upward move. So are these things, is the IWM or the financials, the banking sector, are these giving us an indication that the market is going to break above 460? Could very well be. Maybe we rest and don't try it today, because we did hit 460 and then rolled over just a little bit before we came on the air. But maybe on Monday we get some follow through. But that is extremely bullish. And the next target there has to be, with that kind of a move today, you got to see 50 on the KRE. So I think Alexander's on one as well, as far as some follow through there. Pretty darn impressive and great looking. These DMIs, for people that may not be quite as familiar, I know most of you that watch week in and week out are familiar with me showing this. It's my favorite confirming indicator to Elliott Wave patterns. But these are showing strength. These aren't fly-by-night, moves that we were talking about. So they're supported by good volume. They're showing good strength by the DMI. It's not a fluke, I don't think. A lot of times the market I think the market sets up the retail traders. I don't think that's what's going on here. I feel like this is legit and surprises the hell out of me. But you got to trade what the market is showing you, not what you think. I learned that a long time ago.
Yeah, I'm completely with you. This latest move up in the S&P has been pretty surprising, and it seemed like it was on pretty soft volume for a while there, but it's starting to consolidate and kick in, and so it does feel more bullish than it's felt for a long time. Alexandra's also asking if you can take a look at Domino's DPZ, please.
And this is it's funny, the commentary that I was making on this is I felt like, okay, well, if the economy is going to soften a bit, if the retail trader is going to pull back a little bit, then you would look at stocks like this, right? I mean, maybe people aren't going out fine dining anymore. Maybe they're going to order pizza, just spitballing from a fundamental standpoint. But it's even up with, what's going on with the market. So there we go. And we're almost at now. One thing you notice is that Elliott Wave pattern disappeared. And so that's quite interesting. So we had talked about this about a week ago, I think, when we looked at dominoes, and we talked about how when the wave 4 gets above that 78.6% level, it likely means that this pattern is going to disqualify. And there's a perfect example of it. The pattern that was to the downside is disqualified. Now, the only issue that we have here in dominoes is we felt like it was likely going to go up to 400. Well, that's kind of the neighborhood where we're in today. That's a lot of resistance. So can it break through it? The DMI suggests, again, all these stocks that people are asking about are supported by good strength, at least from the DMI, and that would lead you to believe that we are going to break above 400. But at this point in time, I couldn't chase this one right now. I would want to see a break above 400 with a follow-through day. If so, we're in clean air and dominoes could be off and running. So I just wouldn't go after it now. We're kind of at the area we felt it would get to. Let's let it show us that it can get above 400, but certainly one to keep an eye on with that DMI.
Yeah, I like this kind of stuff at the moment, Rob. I'm actually been trading McDonald's myself. I mean, these kind of restaurants, when everyone's talking about cost of living, people are looking for more affordable food options, and surprisingly, even McDonald's, the prices are up, 20-30% from where we were even 12 months ago. But in relative terms, these kind of markets are providing opportunities for people. Yeah, there you go. McDonald's has had a great one. Yeah. And it's really it's real cost of living driving.
Yep, I totally agree with you, and that's going to get disqualified too. So you're on to another one, as you said, exactly like dominoes. And look where we've got that big. I talk about these a lot. These big round numbers. There's no real technical significance to them, but they just kind of act like the old Star Trek tractor beam effect, where they tend to draw the stocks to them. Just hard for me to believe with that kind of a move. That's my favorite move, as you know as well, JP, is a 45-degree angle. So that's as good as it looks, or as good a chart as you can ask for it to look. Nice 45-degree angle, breakout day today. The positive directional indicator looks like it's about to get back above the 80X. So, yeah, I think we see 300 in McDonald's possibly by the end of the year. Yeah, so good on you there.
Now, I want to throw one at you that I saw you issue a trade alert today, which is Palo Alto Networks, PANW.
Yeah. And that this is my currently favorite pattern. We got a big, huge zigzag here that goes all the way back to the beginning of this 5-wave pattern. And as you well know, and I think a lot of people, if they watch and pay attention, have learned, all 5-wave patterns start with a zigzag, and that's what's occurred here. So we're at the 100% extension. So just to be clear, this zigzag has done what it's supposed to do already. But once we hit one of these levels, then you look to see what's the likelihood that we're going to move on to the extended level, which is 161.8. And again, that's where we look at the DMI, which is just getting going. We've just broken above 20. We're in between the two directional indicators, and it looks like this one wants to go up to 161.8. And as you're well aware, we also have, an AI influence now in the directional search that I use. And it's giving a high score of the likelihood that this continues as well. So you've got a lot of things working, and I think we could see a continuation here. So, gosh, how are you paying attention to all this stuff in the middle of the night there? You ever sleep?
Well, I like all your trade alerts. I saw you had a busy day. I think you closed out 2 winners and you opened a couple more positions. So I try and keep abreast of things. But we've got a couple more. Sorry, go ahead, Rob.
No, I was just agreeing with you. Yeah, we did close out 2 nice winners today and issued a couple more new ones. Yeah, you're spot on.
And we've got a few more symbols for you from people on YouTube. So Oscar's asking if you could take a look at Lucid, LCID. I know you've had some opinions on their cars.
I have, and I had made the comment, and this was back here before earnings, that the car looked better than the stock, because that's not. I mean, if you've seen one on the road, there aren't many of them, but I see one every now and then. It's kind of a neat looking car, and then we had this big move up in front of earnings, but yeah, you can see after earnings. Kind of a disappointment. Now, interesting time to be asking about this, though, because that wave 5 is right at the 61.8% fib level. And what a good one to ask, because the wave 4 went right to the 38.2% corrective level in the wave 4, which means you're supposed to look for a 61.8% extension in the wave 5. That's exactly what happened. And so people that may be newer to the channel this week or in the past couple of weeks, this is why we're such believers in Elliott Wave and Fibonacci levels, because this is as classic as it gets. It's a extremely well formed Elliott Wave 5 wave to the downside pattern. All the fib levels hit spot on with the Elliott Wave levels. So my long-winded point here is that I do know that there's a lot of institutional ownership in Lucid. And we are below 5. And the way the securities laws work here in the U.S. is you have to be registered as aggressive growth. And if your investment objective, if you're an institutional manager, has to be aggressive growth to trade these single dollar stocks. And 5 is the key. So they're probably not going to let it stay down here very long, I wouldn't think. I would like to see. If I was going to enter it, though, I would want to see that. I would want to see that break above 5, because the danger here is if we hang around here too long, the institutions will have to bail, and then you'll see a drift down to who knows, and it ends up on the pink sheets. But for now, with this basing here at 4, it looks like it wants to take a run. It tried yesterday and then came back, and see if we can get today's quote up there. But you got to see above 5 to go long on this. I do think it's certainly one to keep an eye on, though, because the percentage gain that you could have, there we are, up, 3% today, but it's still just below the 50-day moving average. So we want to see that break above 5. And if so, then I think, we could have something there. I just want to stress those rules and the securities rules, and whatever you think of the car, the sales, whatever, it's the price that matters when those laws kick in, and either institutions come in and support it and they buy more, or they bail, and we're in that no man's land right now. So this one's kind of a hands off until it can show us that it can break above 5 with follow through. For me, that's how I view this one. But yeah, I do like the car, though.
And Rob, with those regulations that you're talking about, do you know if there is a mandated time frame for that kind of activity to have to happen? At what point are institutions forced to kind of move out of the stock? Is there a 90 days, or is it a year, or am I just asking stuff that's not something that you're aware of?
Well, no, there used to be a hard, fast rule, and it was 90 days, but now we're going in the past, and it feels like the regulators have relaxed on that a little bit, and they give a little more room for it to move. So I would say probably more, as you were saying, in the 6-month time frame. I don't think we go to a year, but they just seem to have relaxed a little bit on that 90-day rule that used to be years ago. Now I'm going back a ways, but it used to be years ago. It was 90 days that they had to move back, but the regulators, again, giving them a little bit more, and that's why you haven't seen a break either below 4 or 5 here, is because they're going to wait as long as they can before they have to. And the issue here, right, is that if they are forced to sell, they have to take a realized loss. And if we put volume in there, you can see some volume spikes in here. And all those institutions that bought in have to then realize those losses, and they don't want to do it. So they'd rather come in and support it, but they're not going to do that until they have to. They would rather see a break on its own with a short covering rally. But I just feel like they probably will support this one. I'd be shocked to not see this break above 5, but the market shocked me before. And then a break below 4, I think they see it tried right here, and they came in. I'd imagine that there was a little more volume right in here. And it wasn't huge, but there was a little bit of volume that came in. And I just feel like they don't want to see that, especially not now, because it's been basing there for a while. So they're on the trigger finger, but I think they got a couple more months of leeway. I don't know why the institutions kind of relaxed on that. I would imagine there's, some backroom conversations that were going on there. I'm getting into conspiracy theories now, but long-winded answer there is the regulators have relaxed that hard, fast rule of it's got to do it within 90 days. In fact, if you go looking now, you can't find it as far as how long they'll let it go. It just kind of magically disappeared, which is pretty interesting.
That is interesting. Some good insights there. Let's come back to the comments on YouTube. Matt is asking if you could take a look at DNA, which is Ginkgo Bioworks Pharmaceuticals.
Yeah, these are so. If you get it right, you can do so well. But then if you get it wrong, it can be quite painful. And this is getting towards the pink sheets here as well. No support from the DMI here whatsoever. And it does look like that. It got a little bounce off that 38.2% fib level. You can see there. So not surprisingly, it bounced off that fib level, filled the gap, and now we're moving back down. And let's see if we can get today's price. But if you're looking for something from a speculative standpoint, I think you can probably find something else. It's holding that 125 area, so it's having a nice day. It's up 10% today, if that's the reason the question's being asked. But I don't like that pattern. And for me, it's got to get above the 50-day moving average and above that wave 4. So I'd have to see a break above, and there's tons of resistance there too. I would have to see a break above $1.75 here to take a look at this. I would say it's more likely to head lower and test that dollar level, but a break above 175 and completely change my mind. But for now, that's another one that let's let it show us where things are going to go. Obviously, that last earnings report was not well received. We gapped down, so we've gone up and filled the gap, and we've gotten a tiny bit oversold yesterday. We're getting that back today, but yeah, this one looks a little scary to me.
Yeah, it doesn't look like it's been able to get on the upside of any of those moving averages. So I'm with you. I think you need to see a bit more consolidation or some sort of development there that would give you some sort of reason to have a bullish perspective on that one. Now, can I just ask everybody who's watching, if you're enjoying Rob's commentary, please subscribe and like to the channel. We appreciate it. Rob, the next one is from Will. He's asking if you could take a look at Coin for the crypto fans.
I was wondering if that was going to show up. And, we talked about this one last night with the insiders meeting as well. And we looked at it Tuesday night during TradeFinder, that we do every Tuesday night at 9 p.m. Eastern time. And then we came down here and we rectified the overbought condition. I didn't like this vertical move, but I'm going to pat myself on the back on Coin because I've called this one pretty well. Way back when we said that if we could hold 70, you got to stay long Coin. If Bitcoin starts to move up with that expected halving in the first quarter of next year, it's going to drag Coinbase with it. And then if we could get above 80, we'd have something going. And that's exactly what happened. So, I don't get them all right, but I got this one right. And this one moved up. And then I didn't like the vertical move. And you got this give back last night. And we said, okay, well, that's what was supposed to happen. So we came back, touched the 10-day moving average. We're having a big day on Bitcoin today, and there goes coin with it. So I think Coinbase sees 150. I don't know if it does it in the next couple of days, but gosh, it only gave us 2 days. It can be 1 day sideways, 1 day where we came back to the 10-day moving average. That was enough. I did make the comment, so let me be fair, that I thought that corrective move could come down to 110. Well, it didn't. 120 was as low as we went, and then we're back off and running again. But I do think we see 150 in relatively short order on Coinbase, and then perhaps we take our cues and see what Bitcoin and the other cryptos are doing at that point in time. But yeah, I saw it moving back up today, and I was like, somebody's asking about it. I had no question that was going to come up today.
No, that was good analysis. I think you've done really well on calling that one actually over the last couple of months from whenever I've been able to catch up with your analysis. Rob, that's kind of 30 minutes for the show, so we appreciate you dropping by. I know you're going to do a full market wrap for the week over on the EWO channel at the close of the market today. So anybody who is interested in following more of Rob's analysis, get over there to the EWO channel and subscribe, and you'll be notified, obviously, when Rob's update is dropped. But thanks very much, Rob. Good to be on with you. And next time Brandon's out, we'll do it again.
Yeah, enjoyed it very much. Thanks for getting up so early. Yeah, that was a lot of fun. A lot of great symbols. A lot of good commentary. Enjoyed the show very much. Thanks for having me.
Awesome. Thanks, guys. See you next week.
Take care, everybody.